Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, November 8th, 2019. Here are our top stories. Tax misconceptions that can haunt you at the end of the year. And tips for spending your money in retirement. We're in the last few months of 2019. That means Thanksgiving, the holidays, and of course, taxes. Joining me now to discuss some tax misconceptions that many have, Mari Backman. She's a personal finance reporter with The Motley Fool. Hey, Mari, how are you?
I'm doing well. How are you?
Thanks for joining us again this morning. So let's just jump right into it. Let's talk about some of the tax misconceptions that folks have out there.
Yeah, absolutely. Yeah. So one big one is, these days, it seems like every other person has some sort of side gig, right, or side hustle. And one big misconception is that the money you earn from that second gig is yours to keep entirely, that you don't have to pay taxes on it, that the IRS won't know about it. That's not true. So unfortunately, with the IRS, the basic deal is that they're pretty much entitled to any type of income you earn. There are, of course, some exceptions, but when it comes to regular old income from whether you're a dog walker or a freelance graphic designer, that's income you need to report. Now, if you do that work for another company and you earn at least $600, you'll be issued a 1099 form that will summarize that income. So it'll be a little bit easier to know what you're paying taxes on. But otherwise, you are responsible for tracking your earnings and paying those taxes to the IRS.
Yeah, that's a pretty important point. That is a very big misconception. I mean, if you earn income, to your point, you've got to pay taxes on it. And some people who have side hustles may have their own company, right? So they're going to handle their own taxes for the company as maybe a corporation, maybe a LLC or whatever, maybe as a sole proprietor. And then they're also they may be working for another employer in which they get the W-2. So all of those documents you're saying have to be given to the tax, to your CPA or whoever's preparing your taxes.
Right. All of that income has to be accounted for, exactly. And especially if you have some sort of registered business that you're doing that side hustle under. And and a lot of people think, oh, well, I got my W-2, I pay taxes through my main employer, I only earned a couple of $1,000s on the side. What's the big deal? I mean, the reality is, if you earn a very small amount of side income and you inadvertently neglect to pay taxes on it, you may come out okay. Because depending on, if you were due a refund for maybe over withholding on your W-2, through your main job, if you actually withheld too much tax through your main employer, you might actually kind of come out okay. But if you're earning thousands upon thousands of dollars on the side, you need to account for that. And most of the time that actually means that you want to be making estimated quarterly tax payments to the IRS. Because if it turns out at the end of the tax year that you owe a bundle and it's like, oops, I didn't pay it in advance, I guess I'll go and I'll pay it now. The IRS doesn't take kindly to that. They don't want to give you that loan during the year.
Yeah, that's
pretty money along the way.
Yeah, sorry I didn't interrupt you, but they never give the refund back quarterly. So, in all kidding aside, yes, it's very important, and we're talking about this really because we're at the end of the year. Now would probably be the time that people should, if they haven't already looked during the year, they should really be going through and looking at their things that they've spent money on. If they are working for a side gig, start to put this stuff together for their accountant.
Right, and on the flip side of that too is that while you are required to pay taxes on your side earnings, you're also allowed to deduct expenses related to earning that money. So that, if you are a graphic designer and you had to buy a new laptop or certain equipment to do that job, to do that side job, that's a deductible expense too. So keep that in mind too. You want to be tracking your earnings, but also your expenses related to doing business.
Yeah, that's absolutely right. So what other misconceptions might there be?
So this has been going on basically since the tax code was overhauled going into 2018. The fact that itemizing no longer makes sense. So when you file a tax return, you have two basic options. You can take the standard deduction, which the IRS dictates and which changes from year to year, or you can do what's called itemizing, which is adding up your various deductions, things like charitable contributions and interest that you pay on your mortgage. You can add up those different itemized deductions and just deduct that amount that applies to you. So basically, when the tax code was overhauled, the standard deduction was virtually doubled. So because of that, it's a lot harder now for itemizing to make sense. You really do have to have quite a bit of deductions, because right now the standard deduction is just over $12,000 if you're filing a return just as an individual, and it's $24,400 if you're a married couple filing a joint return. So obviously those are some pretty big numbers to hit. But if you do have an expensive mortgage that you're paying a lot of interest on, if you're paying state and local taxes, that's like your local income taxes and your property taxes, though you're capped actually now at a $10,000 deduction for that. If you've hit that $10,000 and you've got, let's call it $15,000 in mortgage interest, which is certainly possible in places where the cost of property is high. Certainly where I live in New Jersey, it's not inconceivable that you're paying $15,000 in mortgage interest and are easily hitting that $10,000 state and local tax deduction. So, basically you have to do the numbers before you write off the idea of itemizing. Though it is a little bit more of a pain, there could be some serious savings involved by doing it.
Yeah, absolutely. And that's where hiring a CPA or using some of that online software, Quicken or Intuit's Quicken, I think comes to mind, among others.
Right.
That you put in all.
Yeah, exactly. And the good thing about, the tax softwares that are out there, unless your tax situation is complicated, they're pretty good at walking you through it and identifying the deductions that you're eligible for and helping you kind of make those decisions. If you've got more of a complex tax situation, maybe you own a side business or you're filing in different states, then I would generally say, hey, talk to a tax professional, because you don't want to muck it up. Not only do you want to, you don't want to risk getting audited, but you don't want to run the risk that you're not claiming deductions you're entitled to. But a lot of the times, you can use those those tax softwares that are out there to kind of guide you in the filing process.
And those tax programs should be updated for these new tax laws, theoretically, now and will be, if not.
Yeah.
And I can speak from experience that I know someone who actually had some errors, not by her own account, on the W-2 and had to go back and work with the state of New York and the federal government. And it was like $1,000, so it wasn't tremendous, but it still matters. It's a lot to go through and contact the Internal Revenue Service and then also the state of New York's Department of Revenue and try to work through those things. So it's best to do these things now, get it all squared away now before you file.
Exactly. You can, for the record, you can file an amended tax return if you discover, an error on your return, but you're, like most things in life, you're probably just better off getting it right the first time.
Absolutely. Mari, we're going to take a break. And when we come back, we're going to talk to Mari about retirement income and how to manage that in retirement. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings in retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. They are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Well, welcome back. You know, it's often a conundrum and an unknown about how much money you'll have to spend in retirement. Should you withdraw 4%? Will you have enough money if you live to 90 or 100? Well, staying around with us, Mari Backman, personal finance reporter with The Motley Fool, and she's got some tips. But Mari, you wanted to make one point with respect to our conversation about taxes.
Yeah, I just wanted to clarify that when we talk about electing your withholding, that's something that's important to do. You're supposed to check your withholding on a yearly basis, and you're actually going to do that on your W-4, which you have an opportunity to update basically at any point that you really want to during the year. So if you haven't done that, go ahead and give yours a check. Absolutely.
Well, thanks for clarifying that. So this is a big issue. Spending money in retirement, how much do you need? It used to be $1 million, it was $3 million, cost of healthcare, $300,000. What are some tips that people out there who are either approaching retirement, thinking about retirement, down the road, or are in retirement can do?
Right. Well, so I think the first thing that you should really do when you talk about managing your money in retirement, going into retirement, meaning, you're a near retiree or maybe you've just kicked off retirement, don't go with these, well, the average American spends $50,000 a year in retirement, or you need $1 million. Don't go by those numbers, because the reality is that everybody's situation is different. A better bet, honestly, is to know your own costs. So, for example, will your mortgage be paid off before retirement? And then if so, well, okay, what's it like to maintain your home? What are your property taxes like? What's your insurance like? What's the cost of fuel and food in your area? Are you going to move somewhere else where it's cheaper? You need to take all of those bills into account when sort of establishing your own framework for what retirement will cost. And, the closer you are to retirement, really, the easier it is to estimate that, at least initially, because if you're 61 years old and you want to retire at 63, and you're in your last year of mortgage payments, and you're going to stay in the town that you're living in, your bills are probably going to largely stay the same unless you're planning drastic lifestyle changes. So, definitely keep that in mind. The other thing, though, that I always tell people who are nearing retirement is this: the one expense that you're probably going to pay more for when you stop working is healthcare.
Yep.
And that's for a couple of reasons. I mean, number one, a lot of us are used to and are spoiled by heavily subsidized health insurance premiums through our employers. So that when we get to retirement, suddenly we're covering our own Medicare premiums. We're paying for supplemental insurance. We're paying for certain services out of pocket that Medicare won't even pay for at all, like something as simple as a dental cleaning or a vision exam. If you're like me and you can't see, you need to get your eyes checked every year. It's just something you do. And you need glasses. Yeah, I mean, I need these to see. They're not just cosmetic, but when I'm, older, original Medicare won't pay for it. So it definitely is smart to read up on healthcare. And that's the one area where I would say that it's not a bad idea to kind of look at those averages, look at those numbers that are put out there, because while every situation is different, really with regard to healthcare, the best you can do, I think, is look at projections and kind of see what you're in for. And I'll give you a very scary number, Jeff.
Okay.
There's a company called Health U Services. They do cost projection software. They estimate that healthcare in retirement for the average healthy 65-year-old couple retiring today is in the ballpark of $387,000.
Wow.
Yeah.
Wow.
Exactly.
And that's for healthy people.
Yeah, reading between the lines, right? That's for healthy couples. And the other thing is that that figure doesn't even include long-term care, like if you need like home health aid or assisted living down the line. So that's the one area where I would say, yeah, look at that research, look at those averages just to give yourself a ballpark figure to work with, and then back that kind of like into, your other numbers to see where you fall.
Yeah, I think you hit on the head, nail on the head, and I think that number's only going to go up just based on what we're seeing. I mean, healthcare costs are spiraling. People are not as healthy as they could be. And I think we've actually talked about it with you on the program. I think we did have a segment several weeks ago, and people can go look at what Mari had to say about that. Mari, going back to your first tip about the budget, many Americans, especially younger Americans, we've talked about financial literacy on this program a lot. They may not even have an idea of what some of the budget line items could be. Some of the financial institutions actually offer like a Excel or Word spreadsheet or checklist that you can actually use, and it's complimentary. You can just download it off the site. I mean, is that something that you would recommend just to get the budget line items? And people should typically know what the items are, but if they don't, they can probably go to these sources and download it.
Yeah, you should definitely do that, whether you're nearing retirement or not. Whether, you should have a budget at any stage of life, whether you're a recent college grad, you're like a maybe tired working parent, or you're kind of at that late stage career point in life where you're, thinking about retiring. Yeah, you definitely want a budget. There are programs out there that you can get your hands on. Another good bet, though, go through maybe 6 months worth of credit card statements, and bank statements. Go through them line by line, and each time you come across a new spending category, put it into your budget so that you're not forgetting about things. Because there might be things that you pay quarterly. Like I pay my property taxes myself, and I pay them quarterly. So if I were to look at 1 month's worth of bills, that might not be in there. But then it's like, oh, wait a minute, I need to be setting money aside every month for that expense. Yeah. So definitely look at your own personal spending, and that way you can kind of map out your categories and see what your money is going to.
Mari, last 45 seconds of the segment, I've been reading a lot about how if someone hires a financial advisor, the financial advisor is less investment focused and more of a financial coach. And it sounds like in some ways, based on what we talked about today, that may be necessary. Sometimes you don't have all the answers, even if you're a high net worth individual, someone who makes money as a doctor, an attorney, or some other vocation, right? I mean, you may need someone to kind of coach you through some of these decisions.
Yeah, exactly. Financial advisor won't just take your money and say, all right, you're going to buy XYZ stock and XYZ bond. A lot of times they're going to take a look at what your goals are, what your challenges are, and they're going to help you talk through those decisions so that if you don't have an advisor right now, it certainly pays to sit down with one. The best thing I always say, get recommendations from people you know. Ask your neighbors, ask your friends, ask colleagues who they use. It's a little bit better than just, randomly searching for one online based on your zip code, because if you know people who are already satisfied, chances are you'll have a pretty good experience too.
Yeah, excellent advice there. Excellent advice in all these segments. Mari Backman from The Motley Fool, thank you again for joining us. You have a great rest of your day, and we'll talk to you very soon.
Sounds good.
And that wraps up this episode of BRN AM, and it wraps up BRN AM for the week, but it doesn't wrap up all of our shows for the week, because starting tomorrow, Saturday, we launch BRN Weekly. So certainly check it out. And don't forget to check out our podcast, BRN Sunday, which is available every Sunday morning at 8 a.m. So until Monday, keep on saving, and don't forget, roll with the changes.